Hello, everybody. This is Noah and John, and we are from UrbanDigs, and this is Talking Manhattan, Johnny. And we are proud to have Mara Flash Blum of Sotheby's with us today. Mara, you got to tell us what's going on right now because we have crazy things to talk about, and this market has shifted big time. So let's just start high level, please. Thank you for coming. What is going on with the Manhattan markets today?
Today, well, I think, yes, looking at your data, it's a buyer advantage market, but it's a buyer beware market
Mm.
because
Hmm.
I know I've been in this business since 1991, and I see the graphs of where real estate was in 1991 and where it is today, and it's pretty shocking what the climb up has been and where we are. And I think we've leveled off. Like, I'm going to call that we are at the bottom. Like, I do not think we're going to dippy do down. I think that that smart buyers are buying now. I just got an email that the contract was signed with a buyer who has been sitting on the sidelines, stepped in, secured a low rate, and jumped into the co-op market. And I'm seeing that financial people who are in that industry, who have been sitting on the sidelines and looking at their cash, are jumping into this Manhattan real estate market.
So we're in a moment of time, Mara, and I mean, it sounds like, I mean, look, I'm hearing similar things about spotty bidding wars. Like there are some situations where there's sellers that do price right, and it almost seems like a lot of the inventory is sellers that are not priced right, so that when the stuff that is priced right comes on, the market kind of comes right to it, and you have this multiple offer situation. But again, it's spotty, and it's not really the masses.
Now, what you need to do now as an agent, you need to find out where the real sellers are and where the real buyers are and make that match. I mean, the tweeners, I call them the tweeners, the buyers that are in between markets, that what they want to buy in 2021, they lost out on because they couldn't get to that number with the competition. Now you don't have that competition. So you have this buy opportunity to go in there without that competition. If the seller just priced it, just a negotiable, like a negotiable pricing, which some sellers want to leave room because they think the market's going to collapse, so they want to go up 5% and then negotiate down 7 or 8% off the asking price. So it looks like it's really that the market's coming down, but I don't think the market is. I don't think the market per square foot is coming down. In fact,
you think it has. You think it's come down. You think it's. You think, just to clarify, you think it's happened.
I think it's happened, and I think that there are neighborhoods. As you say, it's spotty, right? So if you're, it's what it was in 1991 if you were selling in 1991, it's location, light, and view. This isn't 2008. This market is not going to do that. I mean, if we bottomed out, if you bought at the top of the market, which is one of my best years in 2006, 2007, and you do that graph across to where we are today, we are higher than that peak marketplace.
I think you have some awesome points here. I'd like to dig in. One of the things that you said early on is that this is a buyer advantage market, but it's also a buyer beware market. Now, bear in mind that going with this could be the bottom. We're looking forward. Retail's opening back up, so the future looks good. But in the meantime, in this near term, we have to survive the quiet period right now. And I was wondering if you could speak to, number one, what did you mean by a buyer beware, and two, like, for agents, how do they survive this market?
Okay, the buyer beware part is, over the years, buyers come out in packs. They like to know that somebody else wants the apartment that they want. And so then they have to compete for it. And so if you're a buyer in today's market, there's a sense of urgency to buy, like your lease is up, or even if your lease is not up, like if you wait until May or June when those leases are up, and they're looking at the sales market versus renting, and they have a 5-year plan, and they look at all the graphs on UrbanDigs showing, like, if you purchased a home at a certain time frame, like where the trajectory is in that asset class, you're living in your money. you know, and why throw it away on rent when the rents, even though they've come down a little bit, there's still just not a lot of rental stock. So I always look at the retail stock, you know, whether stores are empty or not. I look at the rental product to see where things are and what they're trading and how much it costs to carry a certain apartment. And then I kind of look at the sales market, and if it makes logical sense that you're basically paying the same price a month to carry a home that you own, that you can make changes to, that you can make it your own, that you can commute to your office from, doesn't that make more sense than throwing money away, you know, on a rental and not having a home base like that? So, and Manhattan long-term has always been a great investment property. And as far as the second part of the question was, like, if you're a broker starting off today in this market, this is the best market to learn in. We're no longer in a market where you just open the door and the apartment sells itself. You really, really have to know the nuances of doing a deal. You have to have market knowledge, you have to have negotiating skills, and you have to be an expert. And I think this is the time to really be proactive and motivated and wake up every single morning and say, what can I do to make my real estate career take off in this market? So you have your relationships, you should listen to UrbanDigs every single week and have that market knowledge. You should become an expert in a certain neighborhood where you really dig down deep and use the tools on UrbanDigs to dig down deep in that neighborhood and become an expert there, and then find ways to get a listing within that neighborhood. If you look at, I look at who really needs to sell and who really needs to buy. Who really needs to sell? Estate sales really need to sell. Buyers who purchase something else need to sell. Sellers who purchase something else who needs to sell. Buyers whose leases are coming due, they're going to make a decision because they have a sense of urgency because their lease is coming up. So I started in a very, very down market, and it was really hard to sell something. And I think that that has made me the broker that I am today, and it has catapulted my career because I know how hard it is. Like, this is not an easy job. And I think if you think it's easy, that's when it becomes really difficult to make money at this industry if you're not transacting. So you have to figure out, how do I transact in a down market?
Hey, Mara, sorry, John, I just want to ask you about specific strategies. Are there any techniques or strategies that you're applying to either buyers or sellers to get deals done today quicker?
You have to hold their hand. You have to find them the right product. They have to have an emotional connection, I think, to the home. And once you have that, then you have to figure out, you know, how to represent, whether you're representing the seller or the buyer, to make that match. It's a therapy session, really, because the seller has to feel comfortable letting go of the property, and the buyer has to feel comfortable paying that price and feeling that he's getting good value. And if you can make a win-win situation, which is what needs to be done in this market, like in a fast-moving, crazy market, it's not really a win-win situation. It's the seller wins, right? The seller wins because there's 15 people bidding and the seller's controlling it. Right now, you don't have that. The seller has some leverage on whether they need to sell or not. So if they don't need to sell, they don't need to do the deal. And the buyer has to decide, you know, where is that seller's breaking point? We know it's off the asking price, but we don't know how low they'll go. And negotiations are slower. They're slower. We're at a slower pace, which is a really good moment for the buyer. And you also have to dig down into UrbanDigs and do your comp search and make them comfortable and find those comparable properties that really can make the case for why you want to purchase this property. And I find that the tools that you give me help me be a better broker. All I had before was like Keith Schiller. That's all I had. It's like this one little graph here that said, oh yeah, the market dipped down. You know, I don't have that. You know, now I can go neighborhood by neighborhood. I can go product by product. You know, you make us better brokers. And that's what, you know, that's why and you're a therapist. I have to tell you, I have a confession. Like during 2020, I came on in 2019, but in 2020, when the market was frozen, when we could not show, and for somebody who needs to transact, it's an adrenaline that you need to do. I tuned into UrbanDigs every week, and I think that you were many brokers therapists over that time until we could open back up. And during that time frame, from March until June, I was closing deals. I had to retrade deals. I had to hold sellers' hands. We had to advise the seller what to do, whether to, you know, break up with the buyer and you know, what do you sue over the deposit? You know, it was really an interesting time to figure out how to transact when you can't get into a property. So the only sales you could have done were sales where you already showed it before it shut down.
Right. Well, Mara, you know, I'm so glad you mentioned that this is a great time to be learning, because, you know, this is really what Noah and I are all about. We're all about helping agents, you know, empowering agents to start making transactions and getting better at the trade by learning the data and, you know, getting out there and talking about the data. And as we're running short of time here, I think what I really want to know from you right now, these last question is, you know, aside from, you know, your final thoughts for buyers and sellers and agents, I'm very curious, you know, what pieces of advice would you have for a new agent starting out right now? Like what's like one skill you could master today that's going to make you a better agent in a year?
Get out and see the inventory. This is the first time in a long time where brokers are doing previews. So I have tremendous market knowledge because I was a broker's nightmare. I must have looked at 150 places. I was like, I couldn't find perfect. So I get that buyer psychology that you couldn't find perfect, but there was no internet. You couldn't see even the floor plans online. There was no online. You actually had to show up at the apartment. So even though you see these things online, it's not the same experience as going in and keeping the product. And I used to keep files of the different neighborhoods. Well, I saw this building, so my head is like an encyclopedia of the different neighborhoods, whether it's uptown, downtown, what's buildings I've been in. I mean, I live downtown, my niche is downtown. So I know all the lines, all the buildings, except there is new construction condos. So now I'm learning too. Today's young millennial broker, I know their focus is social media and, you know, Facebook, Instagram. That's how you connect with people, texting. I don't think it works as well in this market with, you know, one-on-one personal contact. That I think is so important. Like I actually pick up the phone in a market like this and say, what are you seeing? I mean, the reason why, you know, we wanted to do this podcast was because brokers were scared over the last month. What you're seeing, your data is showing an uncertainty, and it was frightening that money wasn't coming into their pockets during that September, October. Even myself, I didn't have a lot of closings during that time frame. And usually, you know, it's pretty smooth because the transactions didn't happen for me in August or July. That's closing in September, October. And I think that that's where the data is. But I think you're going to start to see transactions pick up a little bit. And
I don't know, Mara, I got to tell you, I'm not seeing it. I am not seeing it in the data. This is when it's supposed to start, and this is what's worrying me. And this is fresh. This is like my mind is changing like in the last week. You know what I'm saying? This is like
you're saying it's going to go down. You feel like it's going to.
So a week ago, John and I had a conversation. It was like October 10th or October 11th, and we were talking about where deal volume was for October. And it was in the 600s. And it's supposed to be, this is when October is supposed to be the bounce. So you're right. September is supposed to be slow. Totally right. October is supposed to bounce up to 950. And I'm talking to John. And I'm like, you know, we're at 650. And John's like, well, the first week of October, it's too soon. You know, the contracts get signed more and more as you get to the end of October. So now we're October 18th. And like, I have this internal battle of like, let the month play out. But I'm looking at the 30-day pace and we're still at 670. 680. And I'm just wondering if we're running out of time for October, you know?
As I said, I just got a contract signed today.
Yeah.
I think we're going to start to see it trickle in.
That's very possible.
Yeah.
And as you see it trickle, then buyers are going to get they're going to get a message that the Manhattan market is moving. I mean, the streets are busy, the gyms are busy, the retail's coming.
Yeah, you got that vibe. You got that feeling that we don't see in the data. We just see the data. We don't have that emotional feeling. But Mara, really quick, what type of negotiability discounts are those other buyers getting right now?
Not as deep as you would think.
That's what I want to know.
It's so case by case, maybe 3 to 5% off. Like, I don't think we're going to see this.
That hits.
Maybe I'm wrong. Listen, you're the guru. I'm just, one person.
No, you're totally right. Because, one of the things that we've talked about is that we are in a buyer's market, but at the same time that the buyer activity has come down, the seller activity has come down too. So everything has kind of remained in balance as we're going down. So you're not seeing panic sellers throwing discounts left and right, 10, 15% to get a deal done like they were doing at COVID because nothing was moving. That's what we're seeing. We're seeing discounts in that 6%, maybe on the high end region.
Oh, here's you know what I forgot to tell you this. I contacted several attorneys that work in big law firms, right? To see what kind. I always check in on attorneys as what they're seeing, what their volume is. They're still very busy, and the majority of the deals they're doing are under $3 million. 60% of them are mortgage financing. Maybe in this market you can get a contingency. Like I just did a deal with a mortgage contingency in it. So with the board right now, but in a strong market, you can't get a contingency.
No.
So
because we shifted because April's market probably was the other side. Yeah.
Right. So I don't. It's a great market for buyers who've been sitting on the sidelines to jump in. And what I'm afraid of is that they're going to wait too long and they're going to miss that moment. Like even in 2020, they thought the whole world was going to collapse. We haven't seen that. The only time it really froze was 2009. But the under $1 million market was moving. So these attorneys are telling me the under $3 million market is transacting. Now, I don't do that kind of volume, but I just put something in contract that's in that $3 million pocket. And then I have lower end deals in the $600,000 range, but these high end, look at the Ocean report from last week. The high end of the market is moving. Central Park Tower, $6,046 per square foot. Would you ever think that you would see that in Manhattan?
So this is giving me some type of a little bit of positive vibe. Again, I was looking at the data. Well, I gotta take it. Your one window. I always have this rule, right? The market is the market, and no one agent is the market. That's not to dismiss you. That's just it doesn't matter who I'm talking to. Like what you see is a window in your business, and what you see it not necessarily equates to what the entire market's doing. But then again, the data that me and John see does not show that boots on the ground, that attorney information, and that emotional element of what you're seeing right now. All I know is that the deals are supposed to come in. And I just want to bring out a point that you made that is very, very important. This downturn is going to have 3 legs to it. And the only leg that has come forward so far is the first leg of the downturn. And the data that I see on that first leg is that we're down 2 to 6%.
Okay, so I was kind of in your pocket.
I asked you what we're down. You're saying 3. So you're right there. Now, the next couple of legs of the downturn is going to present itself. Because again, if you signed a deal in August, that's going to get closed probably in Q4. If you signed a deal a week ago or yesterday, that's going to be Q1. So everyone must understand that the bottom, we may be at the bottom. We may be going through a little drop again. I don't know. It's too soon to tell. But it's going to be at least another 2 quarters of booked declines. And I think it's going to be 2 to 5, 2 to 5, 2 to 5. And you add up everything at the end of the day. And if you describe where I think we are right now, I wouldn't be surprised if the market's down 6 to 10% or so right now.
Yeah, but you're
Right.
comparing, this is one of the places where we kind of disagree. So I don't wholeheartedly disagree with Noah. I mean, I think that the declines you're seeing are when you compare year over year quarters, right? Because we were going from the peak, right? Early 22 was the peak of this last recovery cycle. We're going to be comparing, quarter one, 2023 to quarter one, 2022. And it's most likely going to be down. So that's just the dynamic of statistics.
Flat? You don't think
No,
it's flat?
But what I think is going to be amazing is I think everybody who's going to be selling apartments, all the sellers in 2023, the first quarter, they didn't buy them in peak 2022. Maybe they did, but most people bought them a long time ago. So most of these people are all coming out ahead of the game. Even if they don't make the top 3 to 6% of the price, they're still doing great compared to where they bought it.
And this market has not, other housing markets are getting destroyed, and I don't think we're experiencing what other housing markets are going through. I think we're experiencing a more muted effect of it.
You mean the other part?
Other housing markets are getting hit hard. Other housing markets are down like 20, 25, 30%. Housing markets that went up 90% over the last 3 years, not New York City. We didn't go up, we barely went up. Right. But those other housing markets that are now coming down big time, again, we're not seeing that in our market. We're seeing a different type of cycle. So
yeah, the luxury market though is strong. I look at your data and I look at what things go to contract each week, and I always say to myself, there's so many people that are transacting above $10 million. There's a lot of those transactions coming up, like to the top closings and top contracts each week. And it's shocking that above, I think the tweener market, the 5 to 8, the 5 to 10, 4, I shouldn't say that, maybe 4, 3.5 to 10 is where you're feeling that. If you're really in that price point, this is a really good time to buy because there's beautiful product out there to take a look at. But I think you're going to see transactions come in under, like if I had to predict, you're going to see transactions come in under 3 million and over 10. You're going to see spotty transactions in the middle. And what I'm concerned about now, given what you just told me, is that the data is going to come out and it's going to look pretty bleak in 20.
Because there's a lag of closed sales, and what this is the thing, you're talking real time. You're talking today. You're talking if a buyer buys today. I'm telling you, it already shifted. It already come down. It happened, which is what I'm telling everyone. The same thing. It already happened. It already shifted. But the actual closed sales data that the headlines get fed off of, we got to wait 6 months to show what happened yesterday. So that's and buyers go, oh, you see, I told you, we went down. You're like, no, those deals are from when I said it in October.
So what do you like in terms of rates of borrowing money? I still think it's historically low, and I think that the younger agents who didn't experience rates in 16%, 15%, they think 5%, 6% is really high, but it's really not. And you marry the property, but you date the rate. So
it's a relative. It's a relative thing. It's a relative thing, and that's all that matters. The fact of the matter is, it was at 2.5%, 3%, and now it's at 7%. And the change of where the valuations were at that level of 2.5% and versus where they should be at 7% should change. And that's the market doing its change. It's going through the process of change.
If it corrects down a little bit and you have a higher rate, you're locking in a lower price at a little bit of higher rate that you'll be able to refinance down the road. And these financial people in this industry, they recognize that. They recognize this is the time to negotiate that 3 to 6% off that you're talking about.
Yeah.
And get the higher rate. And then down the road, when the country goes back into a recession, which is just bound to happen, we'll go through that cycle again of bringing the rates down.
That's the consensus. That's the consensus play. The consensus play right now for anyone listening is have your buyer consider a 5 to 7 or 10 year ARM that has a discounted rate. And at the same time, use points as a negotiating tactic to get a deal done, because there's a better chance that seller will submit $30,000 and buy you a few points on your loan versus reducing their price by $80,000 to get where you want it to be to do the deal. So maybe there's a sideways around way
That's
to
a good
do it.
negotiation. A SEMA is a good negotiating tactic, right? A SEMA.
Yeah. Anything. Now we're getting into the era of creative financing. This is what this is next 6 to 9 months are going to be. All right. Let's stop it there because we're all over the place. Mara Flash Blum, thank you so much from Sotheby's. Thank you for taking time to talk some Manhattan.
For us.
To talk some Manhattan with all of our guests. That is John Walkup. I am Noah Rosenblatt. We're both from UrbanDigs, and we'll catch you next time.